What is up, ladies and gentlemen? If you're like me, then you're a big fan of passive income because it's a great way to grow your wealth and build a second income. But most companies will only pay distributions around once a year, and even then it's between 1 to 3%. So in today's episode, we're going to be checking out 3 US stocks that pay dividends up to 13% and pay you every single month. And on top of that, you'll be earning in US dollars. Then by the end of the episode, we'll be purchasing all 3 stocks for our personal portfolio. So stick around and let's get started. As you know, the markets are bleeding this year and it's been very difficult to bear in our portfolios, pun intended, but at the same time it also gives us fresh opportunities to generate higher returns over the long term because we are buying those same equities and investments at a lower price. As they say in real estate, you make your money when you buy, not when you sell. But there is another opportunity to investing in this market, and it's one we've spoken about on this channel before. We're talking about how cheaper share prices often also equates to higher dividend income because share price and dividend payments are actually valued differently. Let's take a look at it here. You see, the share price is determined by simple supply and demand. If more people want to buy a share than sell it, the share price goes up. If more people want to sell the share than buy it, the share price goes down. So for example, tomorrow if Warren Buffett decides to retire from Berkshire Hathaway, absolutely nothing about the fundamentals of the business will change, but most probably the share price will drop. So it's decided by the people. Dividends, however, are different. More often than not, it's determined by the board of directors as a percentage of net income of the business. Now, there are many factors that determine how the board chooses a dividend amount, but it's not directly linked to the markets. Let's take Sanlam for example. The share price has gone down with the markets, but the dividend payment has gone up from 3 Rand a share to 3 Rand 34 a share. In fact, historically their dividend was between 3 to 4%, but now that the share price is down, you can buy their shares at a 6.5% dividend yield today. So essentially, while the market is down, it's important to continue to invest as usual, topping up your portfolio at good prices, and if it suits your investment goals, to consider dividend stocks as part of your overall strategy. So that brings us to the next part of the video. This year I have been investing 100 Rand in the JSE Top 40 and the S&P 500 every month, and although the JSE is down 3.9%, the S&P 500 in the USA is up by over 2%. Also, the dollar has also gone up in the last year from 14 Rand up to 18 Rand currently. So in markets and currency, the USA has outperformed our local market this year. Okay, so the big takeaway here is that dividend stocks have been at a discount and the US markets have been performing well. So naturally, it's time to take a look for some dividend income producing US assets. So I've been searching around for a while looking for the right asset that would fit this category, and it was actually a casual cash viewer who commented a few months back that led me to a US channel that led me to these 3 stocks that we're going to be looking at today, and all of them are available on Easy Equities. So let's take a look. The 3 stocks that I found and that we'll be buying here today in real time are the JPMorgan Equity Premium Income ETF, the Global X Nasdaq 100 Covered Call ETF, and the Schwab US Dividend Equity ETF. Now hold on. Don't go rushing out to buy them just yet. Let's do a quick breakdown first because there are some things we need to know about them. First of all, let's look at how they work, then we'll look at how much income each brings in, and then we'll head on over to buy them. Let's first look at the Schwab US Dividend Equity ETF. This is a simple one. It's simply an ETF that aims to track the total return of the Dow Jones US Dividend Index. So it's a selection of companies that historically have paid good dividends that grow over time, focused on the quality and sustainability of dividends, and invest in stocks selected for fundamental strength relative to their peers based on financial ratios. So sounds like good stuff, right? Its dividends are around 3.7%, which is not huge, but lower risk, and it pays quarterly or every 3 months. Then looking longer term, we also have share price growth with nearly 40% growth over 3 years, even in this down market. So this is one of the shares we're adding to the portfolio. So we first transferred some rands over to US dollars from the foreign exchange on Easy Equities, then went over to Invest Now section, then into ETFs, and we bought some shares in this ETF. So next up, we're going to be looking at the monthly income, the monthly payers. We're looking at the JPMorgan Equity Premium Income ETF and the Global X Nasdaq 100 Covered Call ETF. Both these funds pay between 9 to 14% dividends per year, and they pay you every single month. But now let's take a step back here because these are a bit different. Okay, so both of these funds are ETFs, right? Basically, they both own shares in companies like Coca-Cola, Amazon, Apple, and others, but a portion of their portfolio is allocated to what's called call options. I've put a link in the description if you want to read a bit more, but we're going to break it down simply. So a call option is a contract that allows you to buy a stock at a certain price in the future for a fee, but you're also not obligated to buy it. So I can say I want to buy Apple from 10 days from now at 100 Rand each. If the share grows to 120 Rand, I can still buy it at 100 Rand and make 20 Rand profit. But if it drops to 80 Rand, I can also choose not to buy it and save my 100 Rand. But remember, to buy the option, there is a fee. Let's say 5 Rand. So if I make 20 Rand, like the first example, I pay the 5 Rand fee and make 15 Rand profit. If it goes to 80 Rand and I choose not to buy, I still pay 5 Rand and make a 5 Rand loss. So with call options, there is unlimited upside with a limited downside. That is, in a nutshell, what call options are. Now, don't worry here. This is just to explain, but neither you nor me are the ones doing these. No, the options are traded by Global X and JPMorgan as the managers of these ETFs. As shareholders of the ETFs, you receive the outcomes of these options, good or bad. So when markets are moving like they are now, there's more opportunity for profit, and when markets are flat, there is less. So that is what these ETFs are. They are an ETF of shares with a portion of call options, both of which contribute to the dividend income paid monthly and managed by the fund managers. These dividends are currently at around 12% for the Global X Nasdaq 100 and about 9.6% for the JPMorgan Equity Premium Income. Those returns are for the year, but paid out monthly. I've been looking for ways to grow my US income and capital shareholding, so we're going to start small with these two as well and slowly grow our shareholding in these ETFs over time based on their returns. So let's head into Easy Equities, and in the same way, head on over to Invest Now and then to ETFs, and we're going to buy a few shares into both of these ETFs with the goal of adding more over time. Okay, so that is it. In a time when markets are offering good purchase prices and higher dividends, we have added 3 new ETFs to our portfolio under our Easy Equities USD to diversify our portfolio into a currency and a market that's been performing quite well. And over time, my plan is to track the performance of these ETFs and slowly add to them using dollar cost averaging or buying in every month, adding to my investment income and my portfolio over the long term. But if you're looking at these, make sure to do your own research before any investments for your own portfolio. I've included links for all these funds in the description if you want to read through. And guys, that is it for today's episode. I hope you liked the video. We're moving towards our next goal of 5,000 subscribers. So if you haven't already, please consider to subscribe to the channel. And if you have any questions, I try to answer them all in the comments below. Thank you so much, and until then, I'll see you guys next time, as always, on Casual Cash. Cheers.